This is, I think, going to be a very, very long secular bull market. We're already 20, according to at least my calculations, say 21 years in. And I think that the period from about 2012 or so till about 2016, when gold and silver went sideways and downwards mostly, that was sort of the middle portion of that secular bull, and that since then things have picked up, and the action in 2020 was basically confirmation of sort of the acceleration phase for silver in the latter part of the secular bull market. So all of that, I guess, that kind of market action got me to think, well, I've done all this research and writing, posting articles and so on gold and silver. And so this would have been March of 2021. And so I said, now is a great time to put all of this research kind of into one place and explain the opportunity that there is in this silver bull market. Assets go through multi-year and sometimes multi-decade bull markets. And I think that for precious metals and commodities, you could argue, so hard assets in general, from about 2000, 2001, have started what I think is a multi-decade bull market. And so just the action, again, really, especially in the past year, when stocks and bonds which are financial assets, have started to really struggle and have had the worst start. That was the worst 3 quarters in any given year for the past century for the combination of 60 bonds, so the standard portfolio of 60 bonds, 60% stocks, 40% bonds, the 60-40 portfolio as it's better known. So that portfolio absolutely, tanked. Bonds tanked along with stocks, and that's because rising interest rates is hurtful to both of those asset classes. And so I think that a lot of people, looked at that and then said, okay, well, this isn't working anymore. I mean, it's going to take a while. We're talking nearly 40 years of a secular bull market in stocks and in bonds. So that's generational. And so to get people to finally believe or accept that bull market has run its course will take several years. But I do believe that for commodities and precious metals, that did start about 2000, 2001. And this is going to last a long time. And people are starting to look for alternatives. And certainly, if you look at how silver is priced historically, based on its pricing, going back decades, if you look how it's priced versus gold, if you look how it's priced versus all kinds of other assets, stocks versus oil versus housing, for example, silver is extremely cheap. Silver having its dual purposes of being both money and an industrial metal, to me gives it an exceptional and a unique, well-rounded place in our lives. And so, and silver's been money longer even than gold, going back 4,000, 5,000 years to Mesopotamia. So silver's been used and known as money, and it really has been in our money. And these are the kinds of things I talk about in the book, that silver's been money for us, for most of the world, for thousands of years, up until at least about 50 or 60 years ago in the 60s, when silver was removed from coinage, mostly in the West and elsewhere. So we're really living an experiment now where we have an unbacked currency, and especially the US dollar, the reserve currency for the world, arguably, that is not backed by anything. That's really an experiment, and my bet is with the proven commodity. The advent of money in history made it so that people could really advance much more quickly in terms of how they did transactions, and allowing people to do transactions more easily helps them to concentrate and to focus and to specialize. And so by being able to do work that you're good at, that you have perhaps, let's say, some kind of an advantage at, You specialize, you do that work, you accumulate, let's say, a certain asset, whether you're a farmer and that's wheat, or whatever it might be, and then you can, instead of having to trade whatever you've produced for some other good that you want from someone else, you have to find that person. The two of you have to agree on, what each your assets are worth. Um, these are not things that are easily accomplished. But if instead you can sell your what you've produced for this widely accepted tradable asset, silver, for example, and then, so you sell your whatever you've produced, you take silver, and then you sit on it until you need to trade it for something else. And really, it's a store of value. But the key thing with money is that it needs to reliably store value over an extended period of time. And we're seeing that if you look at what today is the world reserve currency, the dollar, the US dollar, that's not the case. If in the span of a century, it's lost something like 97% of its value. So, if you had, I'll give you an example. And I did the calculation to look at what silver was worth a century ago. So in 1922, silver was 63 cents, I believe, an ounce. And today we're north of, say, 23, $24. So if you compare the math and the growth or the inflation rate versus the growth in the value of silver, so official inflation in the U.S. over a century has been around, say, 3%. And silver is actually, so that would bring silver to about 11 or $12 an ounce if it had followed the official inflation rate. And silver is really a double of that. So despite the fact that silver is cheap and cheap compared to other assets, and I believe extremely undervalued and underpriced, it still has doubled the official US inflation rate over a century. So you would have, rather than have a dollar in 1922 and still have that same dollar today, which would buy you 3 cents worth, again, rather than a full dollar's worth, silver would buy you $2 worth today. So you'd actually have doubled the value of your buying power over time. It has just facilitated so much of what we do on a day-to-day basis, dealing with each other, transacting with each other, receiving something that until about 50 years ago, at least, you had confidence that, okay, I can sit on this asset for an extended period of time, and I can know that I will take it back out of my drawer or wherever I'm storing it, and I can turn around and use it again to exchange it for some other asset.